Hi, I'm Tarek Beatty from Home Sweet Loans. Thanks for joining us. Today we're going to discuss a very common structure when it comes to home loans, the offset account. Unfortunately though, too few understand the benefits of having an offset account or multiple offset accounts linked to your home loan. So today we're hoping to leave you an expert in offset accounts by the time we're finished. What is an offset account? Effectively, it's a normal transaction account. So just like your normal day-to-day banking account where your pay goes in, your expenditure comes out, you go to a teller machine and withdraw money, that is exactly what that account is. In the instance of a home loan structure though, that account is attached to your home loan. So for example purposes, and because I like nice round figures, you have a loan of $250,000 with an interest rate of, let's call it 4%. Some of you will be on a little bit more, some on a little bit less, but nice round figure. Assume you have $10,000 sitting in your savings account. What happens is, with your home loan, the interest is charged on a daily balance. Okay? So that every day, the balance of your home loan, the interest is calculated, and then it's added on and taken out monthly, or fortnightly if you pay fortnightly. On any given day, the balance of your savings account, or offset account, is deducted from the balance of your home loan, and you pay interest on the remainder. So, in this particular case, your monthly repayment is $1,193 per month. That figure is broken down into interest, based on $250,000, of $833 a month, and the principal portion of $360 a month. And for those who are not sure what principal is, that's the amount that your home loan is actually reducing by. Okay? So, $360 is coming off that $250. With this example of having $10,000 in your offset account, when you deduct it from your home loan, the balance becomes $240. So therefore, that monthly breakdown becomes $800 a month in interest, and the principal portion is $393 a month. So see, the net effect is that your balance is reducing by $33 a month, while your interest charge is $33 a month less. Make sense? The best part about this arrangement here is that it's actually tax-free. Okay? So for example, if you had $10,000 in a term deposit and you're earning, say, 3%, you'd be lucky if you're getting anywhere near that. It's probably closer to 0.3. Let's call it 3. I'm an Arab, I'm generous. Okay? That would equate to roughly $25 per month in interest that you would be earning if you had that money in a term deposit at 3%. That $25, you pay tax on it because it's income. But under this arrangement, you're not actually earning the money. It's being reduced in your interest charge, and therefore, that's more off your principal that's coming. So in effect, the $33 a month difference here is totally tax-free. Why wouldn't you want this sort of arrangement? Now, just to ensure that you've got your heads around what I'm saying, I've got a little quiz for everyone at home. Assuming you owe $250, assuming you have $250,000 in your offset account, what would your interest charge be in this example? Did you say 0? If you did, gold star, that's correct. The balance of your offset account is deducted from the balance of your home loan, and you're charged interest on the remainder. Now that we've explained the benefits of an offset account and how it works and the savings for you, we're going to delve into the structure a little bit further. Most lenders will allow you, in fact nearly all lenders, only allow you one offset account linked to the home loan. Now, a common misunderstanding of an offset account is some people believe or think or hope, whichever one you want to look at, that you can have one offset account linked to all your home loans. That's not the case. No can do. All you can do is have multiple offset accounts linked to the one home loan. Okay? You can have a separate offset account linked to another home loan, but you can't have the same offset account linked to multiple home loans. It simply doesn't work that way. Okay? One particular lender will actually allow us multiple offset accounts against the home loan. So where most lenders only allow you one offset per home loan, One lender will allow you unlimited offset accounts. Now, if you're like me, and you like accounts for many different reasons, you might have your pay account, you might have a bills account, savings account, holiday account, kids account, his and her account. That's a very common one. This particular lender will allow you to link all those offset accounts to the one home loan. So therefore, the sum total of all these accounts is offsetting your home loan. So you might have $2,000, for example, in your pay account. You might have $5,000 in savings, $1,000 in bills. You get the idea. Let's say they total $8,000. That total of $8,000 is 100% offsetting your home loan. So let's go over the benefits again of having an offset account or multiple offset accounts. Your money is working for you on a daily basis. So instead of you having to physically transfer money into your home loan every day or every week or however you might want to do it, whatever the balance is here on a daily basis is working for you without doing anything extra. Okay? So if you're lazy at times, can't be bothered, tired, life is busy these days, you don't physically have time to sit there every day and transfer extra funds into your home loan. The offset account arrangement is already doing the work for you. Okay? So it's working for you every single day. As we discussed previously, it's tax-free savings. Okay? So the interest you're actually saving is like interest being earned, except you're not receiving it in cash, it's being charged onto your home loan, and therefore more principal is coming off your home loan. Okay? Effectively, you're paying it off significantly quicker. And that was the last point we just made. You pay your home loan off much quicker. So the more money you have in your offset account, the higher the portion of principal that's reducing your home loan. Therefore, your 30-year term quickly becomes 20, 15, 10, and before you know it, you own your house outright. Now, a couple of items you need to be aware of as well with offset accounts. They're only available under lenders' professional packages, okay? Where you pay an annual fee, you get a permanent interest rate discount, can't have it under a basic variable loan, okay? Offset accounts, 100% offset accounts are only applicable to variable loans. You can, with some lenders, get a partial offset on some fixed loans. Usually, that's about a 1% offset, but nothing beats 100% offset under this arrangement. Okay? At the end of the day, if we're actually going to fix some of your loan, we'd recommend you leave a portion variable so that you enjoy the benefits of the offset facility anyway. Okay? Now, another question I get asked regularly, and not so much with the younger generation, but probably more my vintage and a little bit older, is line of credits. In the older days, brokers and banks would have you take a line of credit on the basis that you could pay your house off in 5, 10 years, 15 years, whatever figure a spreadsheet produced. And I could produce anything for you on a spreadsheet. The downside of a line of credit is this. Let's go with the number that we've used already, $250,000. Okay? That is your limit. So effectively, it's like a credit card with a limit of $250,000. And of course, it's charged interest only. So there's nothing to force you to pay that principal off. So you could forever owe $250,000. In essence though, the structure's the same. Or your pay goes into this account, or your bills come out, you're charged interest on daily balance. No different to the mechanics of an offset arrangement, okay? But in this particular instance, you're paying principal and therefore your balance of your home loan goes down at all times. So whether you're paying extra or not, or whether you have money in your offset accounts or not, your home loan is reducing over here, okay? Continues to reduce. But over here, there's nothing. It's a limit. And it's just like a credit card. You hit that limit, you can stay at that limit, you just make the minimum payment to keep it under the limit. What is the other disadvantage here? Well, you can expect to pay somewhere between 1 to 1.5% higher interest. Okay? So the rate on a line of credit will be somewhere in that range above your home loan rate under an offset arrangement. Who do you reckon makes money out of that? Don't need to be Einstein to work that out. You definitely want an arrangement like this if you want to pay your home loan off earlier and achieve home ownership as soon as possible. Thanks for joining us today. We hope you found this beneficial, and we hope you've gained a greater understanding of how an offset account works and the benefits of it. If you'd like to discuss offset accounts or anything home loan related further, please get in touch with us at any point in time. We'd be more than happy to assist you. Thanks.